shit.
What's going on, good people, man? Look, it is the Bottom of the Bottle podcast. I'm your host, Jay Walker. That's my co-host, Carolina Dirt. What's going on with you, brother?
Hey, you already know how I say, shit, it's on this hump day. We about to get it cracking for the weekend.
Absolutely, man. This is how we get you through the week, man. Everybody in life needs something, and tonight we're going to bring something that probably a lot of us need, whether we want to admit it or not. We got to fix this credit situation, man. I don't think a lot of us know how important that might be. So, you see we have two guests at the bottom. We have Miss Melissa and Andrew. How y'all doing this evening?
Good, how are you?
Doing very well. All right, man. Awesome. So, we normally start the show with what we call a first call. I'm going to let Carolina go first this time. First call is just a real quick introduction. It lets people know a little bit about you, a little bit about how you think about things without letting them know the nitty gritty about you. Nothing personal, just light and fun. So, Carolina, let Miss Melissa have it. The first five.
All right, Melissa, you ready?
Yes.
All right, don't be nervous. I had just wrote it down. So, if you're in the house chilling, you gonna burn a candle or incense? You got a certain flavor, smell?
No, there's something natural.
What'd you say?
No, something natural. But
Okay.
no specific.
So let's just say you want to exercise or you are exercising. You gonna walk in the street or walk on the treadmill?
Walk by the river.
Okay. So we gonna go in your forte. Would you rather bank with a big bank or a small credit union?
Small credit union.
All right, we're going cornflakes or frosted flakes.
Frosted flakes.
And the last one, your favorite cartoon.
Ooh. I think Rugrats.
Rugrats. All right, that was first call with Melissa.
All right. Andrew, you up next. I got you, brother. We just had Halloween pass by, man. Your least favorite Halloween candy you ever gotten in the bag?
Three Musketeers.
Three Musketeers is pretty trash. All right. If you like Three Musketeers, that's your business. I probably like something that you don't like either. You a boxer, southpaw or regular righty, traditional stance?
Traditional, right-handed.
All right. Hearns or Ray Leonard?
That's not even fair. Ray Leonard, because I know him personally.
Okay. First lesson to teach a new boxer.
How to hold his hands up. Protect
All
his
right.
face. How to protect himself.
Got to protect the baby maker, man. All right. Last question. I just like this question, man. What car did you own in your lifetime that got you in the most trouble?
76 Ford LTD.
Man, he knew that.
Damn, cuz.
Yeah, he knew that exactly. He had a story behind that. you want to share
long
that
ass
story?
carbo.
Yeah, you want to share that story?
No.
So that was our first call with Melissa and Andrew. Melissa and Andrew are from Shark Credit Services. We'll bring Melissa back in here in just a moment. Andrew, go ahead and introduce yourself and give a little rundown about Shark Credit Services and the services that you guys provide.
Sure. So a lot of people when they ask us and we tell them who we are and we do credit repair, the one thing that we have to distinguish from other credit repair companies is that we don't do credit repair like traditional credit repair companies do, in that they send out disputes for different things in your credit report saying, this is not mine, I was never late, I've never seen this account, don't know anything about this bankruptcy, and they'll just keep sending those letters out over and over again. What we do is totally different. We do what's called Metro 2 compliance challenges. And it's a brand new way of doing credit repair that only about 5% of the people in the United States know and understand how to do. But the bottom line in what we do is we challenge the reportability of all the negative items on the credit report. And what that means is it doesn't matter whether it's your late payment, whether it's your charge off, collection, doctor bill, bankruptcy, none of that matters to us. Because the reporters of that data and the reporters and the credit reporting agencies, better known as the credit bureaus, no matter what account you have in your credit report, they have a standard in which they have to meet before they can report that information. So we go in and pick out all the inconsistencies in reporting standards, and we challenge them based on that fact. So again, anything you have in your credit report, good or bad, has a certain standard that it has to meet before it can be reported on your credit report. 99% of the time, it doesn't. None of those accounts meet the reportability standard. But we pick out those inconsistencies in reporting, and we challenge information based on those facts. So we're not sending out frivolous disputes, month after month, and hoping for deletions of negative items on our credit report.
So let me ask either one of y'all can answer this. So as DJ Envy said, let's start from the beginning. What exactly is a low credit score, and is there a low enough credit score where you're just like, hey, you guys might have to figure it out on your own?
No, well, there are different lending standards from different. All institutions have different lending standards. Like 6 months ago, you couldn't buy a house with a 580 credit score, and right now, depending on your situation, you can buy a house with a 580 credit score. So those standards ebb and flow. But I think anytime you get below 580. Or below 600 period, you can say that you have pretty low credit score.
So without naming any names, what's the lowest credit score you work with, that you have worked with?
3 something.
So for the people watching,
I'm about to pop my collar because I ain't never seen a 3 or a 4.
That alone, the reason why I asked that should give a lot of people who are feel down on their credit, that should give them hope that they can generate a better credit score. So as far as a personal story, have either one of y'all helped somebody out where they just thought they were just down and out, like personally, that y'all felt their story?
Yeah, what's good about, so when I say a 3 something, usually when we see a score like that or a score in the 400s, it's because they don't have that much credit at all. There's nothing to score.
Not good or bad, just no history.
Yeah, most of the people, because you can have all bad, all negative accounts in your credit score and generate a 500 and something credit score just by virtue of having information on your credit score. On your credit report. So usually when we see something like that, it's a real thin profile. They don't necessarily have a lot of bad stuff. They just don't have credit at all.
So what's considered no credit or not enough credit? 1 thing, 2 things, or certain amounts?
Yeah, well, that's a good question. So you should have a certain amount of trade lines in every category. For instance, if you got credit card or revolving accounts, your goal is to have at least 3 revolving accounts, 2 or 3 installment accounts, ideally a car payment and a mortgage account. That gives you a pretty good credit profile. And then it's just a matter of building that profile out with more credit lines or higher credit limits, different things like that. So one of the unique things about us, one of the things that we do is we do free analysis. We actually go through your whole report with you, and you don't have to, purchase any of our service or anything. That's complimentary to you. We
Uh-oh.
go through your whole report. We tell you everything that's wrong with it, even tell you how to fix it. Because the truth of the matter is, you can fix your own credit. Most of us don't have the time, and we can't be consistent enough. The biggest thing about credit repair is consistency. Making sure that you send in letters off at the right time every month, the same time every month, and making sure that you construct your letters in a way that's going to get results.
Absolutely. Melissa, so did you have a financing background? Did you go to school for it? How long have you been in this credit repair business?
So I went to school for business, got a degree in business administration. Did not have anything in finance. Actually, I failed accounting very badly. So I did not have a financial background. How Andrew and I got into this is I personally had some situations where I had to fix my own personal credit, and then my husband's, and I was like, okay, I think we can do this. And I was kind of helping family and stuff. And Andrew and I had a conversation like, what if we started a credit repair business? Because I think I'll let him tell his story. But that's kind of how we got into it, just kind of working on our own and getting really good results and doing it for free for other people when we first started out. And then just realizing, honestly, especially in the Black community, how a lot of people it's kind of backwards. You'll have parents putting electric bills in their name, so they start out with bad credit versus, you have other races and stuff like that their kids are graduating high school and they have an 800 credit score because they put them as authorized users on their credit card. So, if we can try to change that trajectory and educate people and, they can change it for their children. So, like, for example, my daughter is about to be 17. Well, she's already added on an authorized user on my husband and my card. So when she gets out of school and, graduates and stuff, she's going to have an 800 plus credit score.
So you would consider that, and I always go to this because people look at it as one way and not multiple ways. That would be considered generational wealth because you're bringing them you're giving them access to the world instead of closing the world off. And, well, you already know you don't want to co-sign for their car, but yet you done put a light bill or something in their name that lowered their credit score.
Exactly. And then also, in addition to that, I think I'm very big on educating them. Like, my son's 13. Like I said, my daughter is about to be 13. My daughter's about to be 17. So not just adding them on, but educating them. This is what's going to happen if you don't pay your bills. I had them taking credit courses. We go over stuff. We homeschool them too. So just really educating them on credit so they know how to, what a good thing it is. And like you said, like generational wealth, they know how to use it and leverage it and, all that good stuff.
Absolutely. So, like most of us, or a lot of us, we work, 40 to 60 hours a week. Some of us are bringing home barely enough money to cover, the expenses that we have. And they are in a situation where their credit is not in a good light.
Right.
Your first approach, or what is your first piece of advice to try to help individuals like that better their situation?
My first is get the free analysis. I mean, there's really no excuse. Like, we literally do it for free. It's no strings attached. So let us look at it. Let us give you advice on it, because we can tell you, look at your report and say, okay, this is what's hurting you. Sometimes people don't need credit repair. Sometimes they just need to pay their cards down. They have high utilization on their cards. They don't have anything negative. So, we turn people away all the time. We're not going to just sign someone up because, we'll say, okay, this is what you need to do with your cards. So I would look at cards. If you're going to look at it on your own, look at credit utilization. Ideally, you want to have it under 30% utilization. However, if you're trying to get the most score increase, it's between 2 and 10%. And that'll drastically change it. Like, we've had people pay down their cards and they jump 60 to 100 points just from paying down their utilization alone. People don't know about that utilization aspect that's factored into their FICO score. So that's one of the big things I would recommend. That, and if you get something in the mail, so a collection agency legally has to send you something in the mail before they put it on your credit report. The problem is people don't open their mail and they don't respond. So You can literally prevent that from going on your credit report by just responding to them. They want you to not respond. And we do it all the time for our clients, or and I mean it's not secret, so we give it to other people as well too. But like, just respond and say, give me some more information. We have a little letter that has all these qualifications of what they need to send, and 9 times out of 10 they don't have that information. So,
Absolutely.
just like you said, Andrew, do you think that should be a course implemented into the high school requirements?
Absolutely. There's a reason it's not.
I could use it more than algebra because algebra kicked my ass. I understood 1 and 1 is 2.
Why don't you think it's in the schools? Listen, it's being taught. It's being taught to the other people.
Okay.
Yeah. Why do you think it's not in schools? It puts you on a level playing field.
right.
Nobody told us when we were younger, me and Melissa, that between us, we own somewhere around 10 or 12 businesses between us. Nobody ever told us that we could even accomplish that. And believe it or not, we start new businesses all the time. I think we started 2 or 3 new businesses this year. Am I correct, Melissa?
Yeah.
We started business during the I don't even want to call it recession, but
Pandemic.
during the pandemic. Excuse me. Nothing stopped.
Right.
I mean, so yeah, of course it should be a course.
So, layman's terms, people, it's not anything that is a rocket science thing. It's not anything that you need a degree for.
Correct.
When people come to you, they get their assessment, and you guys literally give them the choice of whether or not, like, you give them the self-serve option to fix it on their own, as well as taking on, the repair work for them. How does that look in terms of like your business model when they do task you guys with helping them out?
Listen, like I said, anybody can fix their own credit, but it's work. It's work.
Consistency.
It's work. And if you're not going to be consistent in that work that you have to do, then you need to pass it up. You know how to change your tires. You know what I'm saying?
Right.
There's certain things you know how to do on your own automobile. But when you combine the time that you have with what you're already doing, it's not feasible. All right. This depends on how bad your credit is. Listen, man, you can end up working on your credit where you don't have no quality of time, to do anything to anybody else, because it can be that tedious. All right. So that's when you need to use us. If you're coming to us with one negative account, bro, we're going to throw you. Listen, you ain't got to worry about it. We don't want your money for one negative account on your credit report. We're going to help you get that straight,
So do y'all have the lean on me? Somebody come in there asking for help, you give them the help, and then they're frustrated because for whatever reason, and then you fix it and they come back and be like, all praises to you.
You telling people how to spend their money. So yeah.
We get a lot of that. We get a lot of that. They send us their houses, they send us the cars that they get, they send us but listen, that's the easy part. We got customers that are repeat customers every 6 or 8 months.
Oh wow.
And
that's the frustrating part.
These are doctors and lawyers and stuff.
Yeah.
They have money. So I'm saying it's not about having money and not having. It's literally the mindset and that knowledge. But sometimes they just don't care. They're just like, oh, I'll just pay you to get it taken off. Like, we literally had a doctor that had like a collection for $38, and they're like, what do I do? And we're like, pay it. Well, can't I just pay you to take it off? That doesn't make sense. Just pay it before they put it on.
We're gonna pay us $200 to take a $38, and it wasn't even on his credit report.
Oh.
It wasn't even on his credit report yet. It was like, yo, just pay the $38. It won't go to your credit report. And then he says, well, can I just pay y'all to take it off? Yeah, you want to give me $200 to get it off? Go ahead, let it go. But listen, man, NFL players, we got them. NBA basketball players, we got them.
Business owners.
Yeah, the frustrating thing is that they're not taking the education that comes along with it, because we're educating them. You know what I'm saying? And we
Message
where they can leverage their credit, and they're just not doing it.
So how did
Yeah.
how did I wanted to say from my history and my story, like I didn't have that much credit. I ended up going to college. I left college early. I didn't finish, so I kept deferring my payments and all this other stuff. So it ended up I didn't have enough credit, and the thing that was on my credit collection was a student loan. So I tell people all the time, man, it got to the point where they garnished my wages, and I'm talking about for a good 3 years. Like they was just like I try to tell people that all the time. I try to tell my oldest who's in college right now, like, don't go through that.
Yes.
Like if you have an option, don't go through that. But also, and I explained to her when she went to college, I said, if you do 4 years, this is your balance. Like I just want you to know, so
make it worth it.
Yeah, exactly. Like it's different than you filling out the paperwork and asking for a loan. But when you have somebody close to you telling you vocally, you owe this amount, and then coming from me with my history, I'm telling you, they are gonna take it regardless. Like they need no permission.
You know what's funny? Oh, sorry.
No, go ahead.
You know what's funny is that it's easier for you to get a $200,000 worth of student loans, but you can't qualify for a home.
Damn,
but they will give these out to 18-year-olds here, and let them rack up in debt. I mean, we've seen people that I'm like, are you a doctor? $200,000 worth of student loans on their credit report, and they're not a doctor or anything. And I'm like, how? And another thing we tell people about student loans, so we get them removed all the time off the credit reports. You still owe that money. Like that's the government. You still owe it.
Oh, I paid for that.
Is it the same also with those medical bills? Like people have medical bills that pile up. Is it like one of those things that's removable that's going to continue to come back over and over?
Yeah, okay, every negative item on your credit report is removable.
Okay.
Every negative item on your credit report is removable. It doesn't relieve you of the debt that you owe.
Right.
Okay?
Right.
When you owe somebody, you owe them.
Period.
Yeah. Now there's two parts to that. Once there's certain things that reach a statute of limitations, then they can't, and they don't try to collect on it anymore. You know what I mean? If you got a medical bill that's so many years old, I can't think right now, but say it's 3 years old, statute of limitations in South Carolina. After that 3 years, then that debt is basically non-collectible. They don't even try to collect it anymore. Or they pass it off to the collection agency. Excuse me?
Yeah.
Yeah, or they pass it off to other collection agencies. Yeah, they can still collect on it, but they don't.
So once it goes to the collection agency, because I've heard different things, and that's what the beauty of this particular show is getting questions answered that you might have, that you might be too embarrassed to ask. But once they go to collections, I've heard people say once it goes to collections, forget about it, don't communicate with them, you know what I'm saying? And then I've had people say negotiate and try to pay a smaller balance. What do you guys say in terms of that type of thing?
So I would say credit-wise, and this is just from a credit-wise standpoint, if you call them and they agree to do it's like often referred to as like a pay for delete, but it's really like a pay for them to not report. Then a lot of people think if you pay collections, it's going to remove it off my credit report. That's false. So if it's not, like, we don't recommend doing that, because a lot of times initially it's actually going to drop your your credit score, and then after a while, because it's bringing new activity to this old account, after a while your score will increase back. It will show as a paid collection, but if you can call them, and a lot of times they will do this and say, hey, I see that you guys had this collection for me, XYZ, say the balance is $500. I have $150 that I can pay you right now. Would you do a pay for deletion? Sometimes they'll say, no, we don't do that. Sometimes they'll say, yeah, okay. So this is where people don't listen to us when we tell them. Get it in writing before you give them a penny. We have had countless people that we tell them to do that, and they're like, oh, I paid them, but they said they're going to send me the receipt, or they said they're going to do this, and they're trying to get a mortgage or something, or, whatever. And then they're like, well, they didn't, they said they're not going to delete it now when they call back. These are collection agencies. They're kind of like salespeople. They're trying to get their commission. They'll tell you whatever you want to hear. So we always say, get it in writing. And like Andrew said, that doesn't like waive you from owing, but on a credit standpoint, that's what we use.
Yeah, sometimes paying the debt can help get it removed. It just depends on who the collection agency or the creditor is. But then there's circumstances where you absolutely have to pay that debt. For instance, if you're getting a mortgage, your mortgage lender might require you to pay that debt before they'll extend, that loan to you. So, and that has nothing to do with us,
Okay.
Because some people apply for mortgages before they're done cleaning up everything on their credit report. But that lender or that underwriter might require them to pay that medical bill. I've even seen instances where they roll it over into their loan,
Right. And I'm just
not very often.
And sometimes the collection agencies will actually sue you too. That happens. If there's a bigger balance and stuff like that. Now, if it's like $300, I highly doubt it. But they don't typically sue over medical, but like credit cards, repossession, stuff like that, they will sometimes sue you. So that's something to keep in mind as well too.
That was going to be my next thing. I'm trying to hit the things that most people talk about in average conversation. Car repossessions and things like that. Is there a statute of limitation on the loan for a car company? Like, I know that the original loaner will have it for a certain time before they turn it over to maybe a credit collection agency. How do you guys direct people in terms of, I had a car, the car took a shit on me, I need to get into a new car, but I got a repo on it. Like, how do you guys deal with that? Is that a letter writing thing? Is that a phone call thing? Is that a settlement thing?
We really don't get in that. We basically deal with what's on your credit report.
Right.
So, and listen, us knowing your backstory does not help us at all.
Because they will try to tell us
it doesn't. We
their whole
look at the
life
credit
story.
report, we see how it's reporting on there, and we attack it based on what we see. We attack it based on what they're reporting.
Right.
And I can go down a whole rabbit hole as far as repos, because there's certain documents, certain notices that they're supposed to receive before they can even do a legal repo. So we can dig into that and see if it was even legal. Sometimes people have repossession, and it shouldn't be a repossession. It should actually be a charged off, because where they got the loan from didn't actually hold title to that vehicle. They just loaned you the money to get that vehicle. So it can't be a repossession. You can default on the loan and they can charge it off, but sometimes it's miscategorized as a repo.
So how is it, like, if you go to a car lot and they, we accept anybody's credit compared to a buy now, pay here small car lot? Is the credit score still the same on both car lots, and one is just wiggling their way around your credit score? Or
no, buy here, pay here is predatory. That's just period. They're not running your credit. They're gonna give you 121% on a $3,000 car with a blown seal in it. You know what I'm saying? A buy here, pay here is just what it sounds like. So I get that part. But in terms of getting those APR limits, that is where you guys come into play as far as showing good credit scores, so you can get the lower interest rates on your purchase, right?
Yeah, and some buy here, pay here's have lower interest rates than some of these other lenders you see out here, like Capital One, for instance. I've seen them with a higher interest rate. They get the money out now, but I've seen them with higher interest rate than these people you call predatory lenders. All right, when you're doing a buy here, pay here, they're looking at what they have invested in the car, what they want to make out of it, and then they can adjust those interest rates. But a lot of times it's not even the interest rate. It can be the length of the payment, the credit, the payments that they're going to be making, or from 2 years to 3 years, or 3 years to 4 years. They can make that, so they can lower the interest rate and still make the money they want to make. Where somebody like Capital One will just charge you that high interest rate, and and it's just ridiculous the interest rates that they charge sometimes. You know, like you said, 23 to 36%, and some states don't even have laws on how much you can charge people. So there are people out there paying as much as 50% interest. You know, it just depends on how bad you want a car and how bad your credit is.
I know Value City, that shit high. Value City like 20-something%.
Yeah, for furniture.
Yeah.
Made out of patent.
Yeah, but see, but that's the other part of what we do and teach people too. Because once you get your credit where it needs to be, you know what I'm saying, and then you're getting these 7, 8, 9%, $20,000 limit credit cards. You see what I'm saying? So you walk into Value City, you're not paying that 20-some%.
Exactly.
Put it on your card, you're paying 6, 8, 9%.
All right. I was paying
You know what I'm
20-something% a while back ago.
Yeah.
But then we're gonna find you the cars with a 0% for 18 months.
Yeah, that's the other thing. Then you pay it off within 18 months. You're not paying no interest on it. So that's the beauty. That's how you leverage your credit. So we get your credit straight. Then we teach you how to leverage it to get all those things you want. I see people buy. Listen, man, we got people that buy cars off of their credit card. 18 months, 0% interest, as high as 24 months, 0% interest, and we say, hey, just bang these payments out. Pay that thing down as low as you can get it, or as quick as you can get it paid off, and you just got a car, no interest.
So we got your contact information rolling at the bottom. Websites, email addresses. They got fax machine, y'all. This is professionalism. You understand me? I'm one of those people. My credit is trash. I don't have the time. I work to the bone. What type of pricing are we looking at, and what term of time are we looking at for Shark Credit Services to help us out?
I'd love to answer that, but we need to look at your credit. We need to look at your credit.
Okay.
So
that's the fair answer.
Yeah. Because if you got bankruptcies, charge-off, collection, you'll have people with those different things. That's a different type of work, you know.
Absolutely.
Yeah, so really need to look at your credit.
So I had a homeboy who went through a divorce. Mm-hmm. So his credit was poor in a divorce. And then when he got separated, I don't know the ins and outs of the separation. Does he carry that poor credit, or is it like a signature and paperwork they have to go through for him to be divided between the debt and the collection agencies?
No way for that's legal stuff, bro.
Yeah.
We don't
so
if they have account they're both signers on, then it might show up on his credit as well as hers. We deal with what's on your credit report. Period. When it's a legal matter, we'll refer you to somebody else. That's just out of our realm, because what I know and what I think I know, you know how the law is, boy. You get up in there, you think. Listen, man, we leave the law for the lawyers.
All right,
as you should.
Another thing a lot of people don't know. Sometimes people get their credit hit too many times in the same year. Is there a roundabout number, like, you know, if you're trying to get a house and a car, you know, space those out between so many months, or vice versa, or, you know, you're trying to get a house on the credit, you're trying to get furniture for the house, you're trying to get another car because you got another paying job. Is there a certain times within the year that's an average to have your credit hit?
Yeah, the sweet number is 2 times in the year, 2-3 times in the year. But listen, that's different too, because if you're searching for an automobile, for instance, you can have as many inquiries as you want in a 30-day period for an automobile, and it only counts against you once.
For the initial.
Because FICO knows that you're out there searching for a car, so you're shopping around, so they don't punish you for that. Okay. Same thing with a mortgage. Here's where it really, really makes a difference. Certain credit cards, like Amex, I believe, you can have more than 1 or 2 inquiries in a 6-month time frame and apply for American Express and be approved. Discover
is huge on that. You can have an 800 some credit score. If you have too many inquiries, they will deny you.
And this is where you come into this is where the education comes in. A lot of people think because they got an 800 credit score, they can go out and get anything they want. from anybody, and that's not true. Every lender has a different criteria. You know what I mean? So you think something like, I ain't got but 2 inquiries, I got an 800 credit score, why y'all denying me? Because that's their criteria. Those are the standards you have to meet to get a card with their company.
And
Go ahead.
while we're on the house thing, either the house or the car, because we have so many real estate professionals and mortgage lenders, get your house first. Do not go in the mortgage process, because we see it all the time. They're in the mortgage process. We got their score up, and they pull up in a new car, and we're like, "No, what are you doing?" And then they don't get approved for that home because it's debt to income. They ruined it, and don't do that. Get your house first, then you can get your car, your furniture, all that other stuff.
So you see the question? The question is, how long do you have to be employed to purchase a home? Example, 6 months to a year.
That would depend on the lender. We have an awesome lender that we can recommend. Her name is Mandy Anderson. She is awesome. So I would recommend contacting her about anything mortgage. She does, I think, South Carolina, North Carolina, Georgia, and Florida, I believe. I think that's what she does. Okay.
Yeah.
So I will contact her.
Yeah. As a general rule, about 2 years in the same profession. That means if you worked in, if you worked at a hospital over here, and you're still working in the same profession, 6 months later at a different hospital, as long as you're working in that same profession and you change job, you're okay.
So that's a misconception, because a lot of people think because they switch jobs that
they can. Yeah.
That's important for people to know and understand. And like I said, and Mandy can explain that a lot better. But as long as you're working in the same profession, you're allowed to change jobs. Yeah. This is more, that rule I think really comes into play when people are jumping. You're a janitor this week, and then you're doing construction this week, and so there's no consistency in your employment. You know what I mean? But if you're a machinist, if you go to another company and work as a machinist, your job title hasn't changed. Just your
position.
The company you work for. You're still working in your profession.
Is there such a thing as a soft credit check, and how do those credit inquiries affect you?
Yes. So when a lot of people will think if they go to Credit Karma or Experian, they're like, well, I don't want to do a credit pull. That is what is considered a soft pull. So they'll periodically pull your credit to get the score. So that's no effect. It's not going to result in a hard inquiry. Also, if you go on, we talked about Discover. If you go on Discover's website, I believe American Express, a lot of them have where you can get to do a soft pull to be a pre-approved. So we always recommend doing that before you do a hard pull, because it'll let you know if you don't even qualify. They'll be like, no, we don't have anything for you at this time. If you do, even Navy Federal had it. There's, a lot of different banks and stuff like that to do the soft pull. That's not going to result in a hard inquiry unless you're approved for the actual card.
Yeah, nobody will either. Listen, none of your creditors will see that soft pull.
Okay.
So you see the question, what about getting a second job to boost your income?
I see nothing wrong with that. Listen, I think it's smart to get a second job to pay down your credit cards and all that credit that you have, Because as long as you can lower your debt to income ratio, like the more house you qualify for. Yeah. So I think it's counterproductive to go get a second job just to say you're making this much money and you got a bunch of credit cards and high utilization. Get the second job to pay down utilization and kill 2 birds with 1 stone. Because, listen, lenders know it's a second job. It's not your primary job. They make you list that your primary job, and if you got a second income. But then when you get a second job, you still got to be, in order for it to be counted as income, you're going to have to be on it for a period of time, probably those 2 years. So get it just to pay down your debt.
Is there a number of, and I know everybody's different, but in either one of your opinions, is there a thing as too many credit cards?
It might not be good for me to answer that.
So they actually have people that do what's called like gardening, and they shop like every 6 months to a year or whatever. They apply for a whole bunch of different cards at that time that they know that they already have good credit and stuff, and they kind of just leverage their credit and move it around and take advantage of the 0% APR cards and stuff. I would say, as long as, me personally, as long as you are keeping those cards under, the utilization, being responsible with it. I think that's the whole thing, is just being responsible with it. Because some people literally get cards and they know that they're going to charge them off. And then they do it with lenders like Navy Federal. We're like, what are you doing? How did you let that charge off? That's like, great thing. So, yeah.
Yeah, I don't think there's a such thing. I think ideally, like I said, you want to have 2 or 3 credit cards so you can get the maximum points in that particular area of your credit report. But the more cards you have, the more you're able to leverage your credit to do other things you want to do. But you got to be smart about it. You need to be educated. Listen, a lot of people that I know and most people that we deal with, they start getting those credit cards and they go wild. They go buck wild.
Yeah, I got $10,000.
Yeah, I mean, I've definitely been a victim of it. As you get older, you hope that you start to make better decisions. And the things that we do as a community, the things that we have against us in the way of knowledge in this field, we're getting ready to start to kind of wind down. I'll pose the question to each of you. You work together, so you probably have the same answer, but you might have different insight. What are the biggest misconceptions from the people that you've worked with about their credit activity and the way they thought credit worked?
I would say with mine, people think, okay, so for working on their own, let's go back to that, people working on their own credit. So when they send off these dispute letters or whatnot, and then they get their results back and it says, okay, everything's been verified, people get so upset, like, oh my God, it's going to be on this forever. They get so discouraged, and we're like, chill out. Like even our clients sometimes they're like, oh God, I know it's not going to come off. What would I do? And we're like, chill. That's what they do. They send out responses sometimes that are even sometimes automated that just like, okay, no, everything's been verified. Like, chill. So I think that's one thing, is they think if they send it off one time and they say it's verified, they're like, okay, I can't do anything else about it. And you can't. You have to, these credit bureaus are independent companies. They are not the government. They are for-profit companies. Experian, Equifax, TransUnion, Innovis, all these companies are for-profit companies. So I think that's another thing people don't realize, is that a lot of people don't realize, is that credit bureaus are for-profit companies. They're all separate companies.
They're there to make money.
I think that's a big thing. That and credit utilization. People don't understand credit. If you have a card that's $1,000 limit, I tell them, like, don't use more than $100, or if you do, make sure you call the credit card company, figure out what's your reporting date, because your statement date and your reporting date can be 2 separate dates. So if your reporting date is the 3rd, or let's say the 15th, and reporting date is the 15th, by the 10th, try to pay that under 10% or at least under 30% before it reports. So I think that's.
Yeah, I think one of the other biggest misconception is people thinking that every negative item on their credit report hurts their credit. In some instances, negative items on your credit report actually helps your credit, and it helps your score.
And why is that? Can you explain why that might be?
Yeah, because the credit report is broken up in, for lack of a better term, different segments, like payment history, all right, which takes up the biggest chunk, 35%. Which is why it's important not to miss payments and stuff like that. But then you got your amount of debt, which is your utilization, the length of your credit, which has a 15% impact on your credit score. When we're talking about length, we're talking about the age of credit. So, for instance, if you have a collection of charge-off for a late payment, when it first happened, it has a big impact on your credit score. But the older it gets, the less impact it has on your credit score until it has no impact. So for instance, a charge-off that's 4 or 5 years old has no negative impact on your credit score as far as it being a negative item, but it has a positive impact on your credit score because of the length of history that it adds to your credit profile. So in those instances, we would advise not trying to remove those accounts because it's actually helping.
See, again, that's something that I would have never known. And that's what this question, that's what this session is for. I'm glad that we talked to KK and that he brought up Melissa and brought up the whole shark credit repair. I just think it's I think we're as woke as a people as we've ever been. You know what I'm saying? And even though you woke, you might not have the resources or the knowledge to do what you want to do. But we have people like Shark Credit Repair, Shark Credit Services out here to answer these questions. So we're going to go into...
Let me ask you because KK did ask to bring up his new business. Between a personal credit and a business credit, can either one of y'all just give a brief breakdown of that? For a lot of people start their own business with through COVID and all that, and there's a lot of people that want to start their business, but their personal credit might be not what they want. But is there a difference in starting a new business with no business history and you starting a new business?
Yeah, one of our biggest companies actually is our business building company, and it's totally independent of our personal credit repair company. And they should be, because you can build business credit with terrible personal credit. But we always advise that while we're building this business credit, work on your personal credit, because there's going to come a point in time down the road where you can leverage both of them at the same time to realize hundreds and hundreds of thousands of dollars. You know what I'm saying?
Hundreds of thousands, you say?
Oh yeah.
Look, man, you're looking at the two people that do it.
Yeah.
Absolutely.
The people that got that PP loan, they got their credit check before they got that PPP loan.
I think they did do it, but they weren't really looking. I think with the PP loans, with the PPP loans, I don't think they were looking for a minimum or maximum score.
Okay.
I think they were looking more to verify identity more than anything else.
The EIDL.
That's why so many people got them.
Yeah, the EIDL, they were denying people for that.
Yeah.
For credit scores.
All right, so KK, we got to give him credit because he came on showing some love. Hey, we got to ask you about his new business. What's my new biz?
So that is our business building company. Mine is called Mighty Biz Consulting. So that is when we build the business credit for the clients completely on the EIN number. So it's not like Andrew said, that's the name of that company. And if you want us to come back on and talk about that company, we'll be happy to tell, because that's a whole completely different ball game, building business credit.
Yeah, but we're changing lives with it, brother.
Yeah.
Actually, we can take you from where you are right now, you starting your business, and then 5 or 6 months later, having $100,000 in usable credit for your business.
Well, see, we think about making this a business. So we have to talk to you about that.
Definitely.
I don't understand. You have to. It's not.
You have to. Yeah.
Think about. You have to.
Now that you said that, reminds me something. So many people missed out, our clients and people that we know, on that EIDL because they did not have stuff formatted properly. They didn't have their LLC in place. They didn't have business bank accounts. So it's very vital, very, very vital to have your stuff in order. Like, gotta have it.
Okay, so this is, and before we go, this is what I want to do. We got a couple people that have been on this show because we cater to people like us, people starting a business, but all these people are people we know through life. So we would like to bring y'all back with about 2 or 3. We'll have one of y'all, or if y'all want to come together on one camera, we'll try to do it. But we have 2 or 3 people that have their own business that would, on that episode when you're talking about the business part of it, that's valuable information that they probably would want to know also.
That would be great.
This is something that I feel like it should be done on a regular basis. I'd like to see y'all on a lot of, multiple platforms, just to get the information out in terms of what it does for the community, man. We can never have, we spend so much time, like the things that we are interested in as a community, as a culture, we do it 100. 1,000, sometimes 10,000. And I don't think we always put that energy into the things that we need. So if we can make this a more regular, visible topic for people, I think it does great things for the community. You know what I'm saying? I'm gonna let y'all have a moment. You can go first, Andrew. We let Melissa close it out. Is there anything that we probably grazed over, or anything that you want to let people know about improving their credit and the services that you guys provide at Shark Credit Repair?
Yeah, I'm going to echo what we said earlier. Listen, take advantage of our free analysis. We used to charge $299 for an analysis. I mean, really, it'll change your life. It'll change your world, because we're going to teach you how to look at your credit report, how to read your credit report, the things you need to fix, how you can fix them on your own. And if you need to use us, we can definitely help you to do that. But take advantage of the free credit analysis. We're spewing some knowledge.
I'm going to do it. They about to get my information in a minute. I'm going to tell you that right now. You know what I'm saying? Melissa, what did you have in closing?
I would say, I know we talked about adding new collections and how those can be detrimental. Also, the other thing that can be detrimental is, I think Andrew mentioned it, but late payment. If you are going to be late, if God forbid you have to be late on something, try to call the bank or creditor ahead of time and see if you can work something out with them, because a 30-day late is detrimental. I mean, it is dropped people 100 points, from one late pay, one 30-day late pay. So if you can, just try to be proactive. There are people like just you and I. The worst they can say is no. But if you call ahead, a lot of times they can work something out with you. Try to prevent, those charge-offs, the collections and stuff like that. Try to work something out, to prevent that.
Absolutely. Look, we're going to let y'all work. He said, open your mail. This is the last call. The bar is closing. We doing this time capsule thing going out. So I would say the time capsule this week, and y'all can work together. 5 things, 5 tools, whether that be traditional tools, digital tools, whatever. 5 things that you would want people to know about this generation 100 years from now.
Oh, me?
That blew her mind.
Between the two of y'all. Between the two of y'all, y'all can give us 5.
About this generation?
100 years
from this generation 100 years from now, yeah.
Yeah, that this is the most innovative generation that has ever lived.
This is a generation that does not just blindly follow things because someone told them something.
Okay.
That's 2. Need 3 more.
Yeah. 100 years from now, credit scores won't matter.
Okay. That's real.
Yeah,
that's real.
This is a generation that left an inheritance for their kids like us than any other generation before.
Generational wealth. That's folks.
Yeah.
Nobody gonna say a hammer, cuz? Nobody gonna say a screwdriver?
Nobody gonna say real soon.
I'm just being silly, man.
I got one more.
Nothing that is everything that's being built or developed now will be non-existent 100 years from now, because that goes back to what I said about innovation. The way that we build houses will come in a box from now on, soon, and that's coming really soon. They're already coming in a box. You won't be driving automobiles right now. So prepare for the innovation. That's when you're buying these, when you're buying stocks, when you're buying these altcoins, when you're investing in different things. Invest in innovation.
That's fine.
That's a real one. Look, it's been a super awesome show. We're definitely gonna have Melissa and Andrew back again. Shark Credit Services. Their information has been scrolling at the bottom of the screen for the entire show. Don't say nobody ain't tell you, cuz. We like to say ain't nobody put you down. Well, why you ain't tell me, man? You had the link. The link is down. It's down there. There's no excuse anymore for you to suffer from a system that has been put in place to hold you back. You have allies.
Go ahead.
No, you have allies. At the very least, right now, you have Shark Credit Services. And if they don't do what you want them to do per se, they're not the only ones out there.
Yep.
Do something to help yourself and to help the kids that follow behind you and the generations that follow behind you.
Yeah, and I was gonna say we have done ignorant shows, we have done ignorant topics, we've made ignorant comments.
You
we
keep
have
saying
ignorant
ignorant.
conversations. I mean, but that's the reason why we call ourselves hashtag the connoisseurs of conversation. Like we having a real life conversation. We trying to change lives within having fun and being serious. And on the way out, hey, I'll stay on the line real quick while we close this out.
Thank you, everyone.
Hey man, look. This has been the Bottom of the Bottle Show. That's my host, Carolina Dirt. Thank you again. Shark Credit Repairs, Shark Credit Services. Again, the information is there, y'all. You have no excuse. These are good people that sat down and shared an hour of their time, basically for your benefit. I appreciate y'all always. Like, share, subscribe. It's the Bottom of the Bottle. We out of here, man.